What's going on, everybody? What's going on? It's Mr. USD Marcus Willpower here, and I'm back again. Uh, we're just gonna go through our normal routine. Gonna analyze the DXY, gonna analyze gold. Look at what we predicted last week to happen. Look what's happened. And what can happen going forward. So, just starting off here, this is the monthly chart for the DXY. So nothing has changed. This is a monthly chart. So remember, this is the candle that's green right now is a monthly candle, which is going to close at the end of this month. So my analysis right now is telling me that the DXY is bearish. So I'm expecting this candle to then reverse outwards to become a bearish candle and leave this as a wick to the downside. Just following the momentum of these two candles. Maybe we get a third one, big push down here. If we go to the weekly, on the weekly, we did expect the DXY to retrace into this order block, plus the confluence of this descending channel, so the upper resistance here. We did expect the DXY to come into this order block and retest the order block, but it slightly missed the order block. Slightly missed the order block. However, if we look on a daily time frame, we did have order blocks in here. Actually, first before that, we had a hidden base. So a hidden base is when two candles that are kissing like this. That's what I call a hidden base, right in there. So the market rejected the hidden base plus this order block, and as well the confluence of the descending channel. Thus, I'm still expecting the DXY to be bearish. If I look at my market structure, there was my high, high low, higher high, broke market structure. So I'm expecting a continuation of the trend on DXY according to this market structure break on the H1 plus the confluence of the order block and the descending channel. Altogether, I'm expecting DXY to continue bearish. That's my analysis on the DXY. So if I'm expecting DXY to be bearish, I'm expecting gold to be bullish. So let's look at gold and go on a monthly time frame. Uh, so gold, like I said as well, this is the monthly chart, and I'm expecting a big bullish candle to the upside at the end of the month. This candle end up being a big bullish candle. Just following the volume of these three previous candles. If we go to a weekly time frame, again, we're looking for gold to come in touch. We trade from trend line to trend line. So we want the market to consistently reverse from the trend line. Thus, I'm still saying that gold still has some more room to come into. It's not always going to test perfectly, but there's still so much space here that the market can still come in and fill up the space and come closer to the trend line. So that's what I'm seeing right here. And as well, like we said last week, rally, correction, rally, and we're building up now. Let's go into the daily time frame. On a daily, if we look at our trends within the trend, so basically this purple trend is a trend within the larger time frame trend. So trends in trends. That's a FX code strategy. I learned it from the FX goals, and that's what I took mostly from them, the trend lines, how they draw their trend lines, and uh, how they do their trends and trends. So, like I said, according to our trends and trends right now, if we look at the shorter time frame trend, we have a push, correction, push, correction. And now we're having a push, correction, expecting more pushes like that. So if you look at our market structure, we have our high, higher low, higher high, higher low. This is our previous higher low, right? So anything between here, the market has the potential to come down into here. That's still allowed according to market structure. Anything below there, then we're expecting maybe sales to the downside. But the market still has potential to come up into here, right? Uh, with that being said, this if I come down into a smaller time frame, my current trend that's within a trend is telling me that my market structure here, this is my low point, higher high, higher low, higher high here. So on my smaller time frame, which is the H4, my higher low is here. So the market tried to come and test, found resistance at this trend line, plus this low here, reversed, and now we're looking for a break out of the bearish flag pattern. I mean bullish flag pattern, a breakout and a push up of gold. Because my market structure is all supporting bullish movement. Nothing has been violated thus far. Uh, Plus, I have this descending bullish flag pattern that's price accumulating, right? Let's go down into the smaller time frame. Let me just remove some of these drawings, right? This is my view on gold. You know, everybody's a speculator. Everybody that's trading, no one really knows where the market is going. Everybody's speculating. I'm just speculating, but you have to speculate consistently according to your strategy and keep doing that. No one knows where the market is going. This is according to my strategy. Someone else could be shorting right now. I'm looking for bullish movement. So if I go down into the H1, uh, so since I said this is my higher low on the H4, let's look at the market structure here on the H1. So we have our lower high here, lower low, lower high, lower low. Broke market structure here. This push. This is our lowest point. This is our lower high. Lower high was broken by the market. So from here, I'm expecting bullish movement from gold. Since it broke market structure here and here, it still respected market structure. This low here is still intact. I'm expecting gold to continue bullish. I'm expecting gold to continue bullish. Let me remove these. I'm expecting gold to continue bullish. So with the market structure in perspective now, you can mark that small point there. We then look at our second confluence. You can see that we have this sort of pattern. Yeah, we have this sort of pattern right here, our bullish flag pattern. So I'm expecting the market to push up, retest some sort of, and then continue up bullish. That's my view on gold right now. Uh, last week, yeah, last week, last week, let's go to this chart. Last week, we were expecting gold to reverse from this point. We had said that this is our daily order block. and we're expecting gold to reverse on this point. And we had a touch of that order block on the daily. The first order block was here. I think that was one I had marked, got violated. There was a second one that was still here, so it was still good, in line with market structure. The market tested this order block and reversed off. So from here, I'm expecting gold to just continue up. That's my view on Xauusd gold. Let's go into the 4 hour. Exactly, this was our 4 hour order block. Just to make it perfect, it's that candle right there, or maybe these two candles right there, in line with our low. So I'm expecting gold to continue up from here. I'm bullish on gold, bearish on the DXY. If by any chance gold breaks below here, my next selling point or my next buying point would be at this level here, right? Anything below this level, now I'm looking to short. Now I'm looking for gold sells. Anything below this level right here, I'm looking for gold sells. If gold breaks this level down here, this one down here, we could get sells of this manner, maybe a rise back up into here or something like that, and then a drop, or just a straight drop from here. Those are the two possibilities, but for now, everything is bullish. My bias is bullish, so I'm only looking for bullish trades. Until then, we'll see what we can do, but for now, I'm just bullish on gold. Let's also just look at the sentiment and the news that might come through. So we have CPI on Thursday at 3:30. So that means I will not trade until Thursday. I will not put in any entries until Thursday. I currently have some buys on gold, so I will not touch those buys unless the stop loss is hit. If the stop loss is hit, then I'll see what I'll do. I'll wait for Thursday to trade, but I'll just sit and hold my trades until Thursday. Hopefully the market pushes up and CPI gives us more bullish movement. If we look at the sentiment, we always want to be with the minority, and the minority is long right now. Majority is short. Retail traders are short. The big volume, the big money is long. So I always want to be in line with the minority. So yeah, guys, this is Mr. Xauusd, Marcus Willpower here with the gold analysis and a DXY analysis. If this trade manages to go in the direction that we're expecting, I will be scaling in. I've learned some scaling strategies that I would like to share. I learned them from Tom Hogard. He's a high stakes trader from the Netherlands, I think, or he's Dutch, something like that. But basically, I'll just give you the two scenarios that he gave me, or the two scale-in strategies that he gave me. First, there's the first principle where you scale in. Let's say your first position is a standard lot size. When you then scale in, you scale in. Your next entry should be half that, which is 50 cents, or 0.50 entry. Then when you then scale in the third time, you scale in with 0.25. So that's first principle. Scaling in. After that, you have what is called a second principle, same size position, scaling in, where every single time you scale in with the same position. However, every single trade is a trade in itself. Every single trade has its own stop loss, right? And the subsequent trades that are below follow. You trail that stop loss at every single new scale in. I don't know if that makes sense, but if you want me to talk more about that, just let me know in the comments. Maybe I can do a video on that or something like that. But for now, this is Mr. Xauusd, Marcus Willpower. Enjoy the new trading week. Gold is bullish, DXY is bearish, and that's my bias right now. So yeah, thanks guys.